Assalamualaikum warahmatullahi wabarakatuh. This is Sinta Aryani. I am a lecturer of IEJ 3L2, the Enterprise Design and Analysis course at the Industrial Engineering Program, Telkom University. Time to learn, and let's learn about income statement. Okay, let's start talking about financial statements or report. What is financial statement? Financial statement is the report made by the company in terms of financial. In general, there are four types of financial statements or financial reports. The first one is the income statement. In Bahasa Indonesia, we call it laporan laba rugi. The second one is the balance sheet, or in Bahasa Indonesia, we call it neraca. And the third one is the statement of retained earning, or in Bahasa Indonesia, we call it laporan laba ditahan. The last one is the statement of cash flow, or in Bahasa Indonesia, we call it laporan arus kas. Today, we're going to learn more about income statement. Stay tuned. Income statement. Income statement. Income statement is a financial summary of the firm's operating results during a specified period. Most common are income statements covering a one-year period ending at the specified date, ordinarily December 31st of the calendar year. In addition, monthly income statements are typically prepared for the use by management, and quarterly statements must be made available to the stockholders of the publicly owned corporation. This is what the income statement looks like. Basically, income statement looks like, or income statement can be divided into 7 parts. The first part is the sales revenue. The second one is the cost of goods sold. The third one is the operating expenses. The fourth one is the interest expense. The fifth one is the taxes. The sixth one is the preferred stock dividend. And the last one, the seventh one, is the earning available for common stockholders. The earning available for common stockholders, usually we call it as the profit earned by the company during a certain period. Let's talk about simple income statement. This is what the simple income statement looks like. Simple income statement only consists of 4 big parts. The first one is the sales revenue. The second one is cost of goods sold. The third one is operating expenses. And the last one, or the fourth one, is the operating profit. Simple income statement does not include interest expense, taxes, and profit sharing. Profit sharing is available after deduction of interest expense and taxes. Now let's take a look deeper on income statement. The first one, we're talking about the sales revenue. What is the sales revenue? Sales revenue actually the quantity sold by the firm multiplied by the price of the product they sell. For example, if in 1 year a firm can sell the product of 200 and the price of each product is $15.37, then for 1 year, the company or the firms can have the sales revenue of $3,075,000. The second one is the cost of goods sold. The cost of goods sold actually is the direct cost of product or service. Direct cost itself is the cost that directly associated with the production. For example, for furniture manufacturing, you can name it what the direct material or labor that associated with the furniture manufacturing. Raw materials like woods, nails, or paints, and so on. That's what we call the direct material, because it directly made the product. And what is direct labor? The direct labor actually the labor that directly involved in the making of the product. For example, the woodcutters, the sewers, the painters, and so on. And the third one is the operating expenses. The operating expenses actually is the indirect cost, which is the cost that involved in the production of the goods or service only is not directly. For example, in the furniture manufacturing, the selling expenses, the administrative expense, the general expenses, and so on, they're what we call the indirect cost or service associated with the production. Let's go on to the next part in the income statement. The fourth part is, we call it the interest expense. What is the interest expense? The interest expense actually the interest paid by the company for the fund they borrowed from the bank or the third party. For example, if the company borrow $930 million and then the interest that they need to be paid is 10%, then the interest expense that need to be paid by the company is 10% multiplied by $930 million, or it's equal to $93 million. The fifth one is talking about taxes. Taxes is the tax paid by the company. In this example, the tax need to paid by the company is $94 million. The sixth one is the preferred stock dividend. The preferred stock dividend is the profit sharing in terms of preferred stock dividends paid by the company to the preferred stockholders. This is the obligation that the company must pay to the preferred stockholders. In this example, the preferred stock dividend need to be paid by the company is $10 million. See you again later. Thank you.